I play golf. It's taken me a long time to just enjoy the game. Everyone gets frustrated with golf. It's a 4-letter word because all the other ones were taken. I've moved away from throwing a golf club, screaming and hitting something with a golf club because I'm not that good. I like golf. I enjoy being around golfers, friends, but I'm not a good golfer. But this isn't personal confessions from a bad golfer. Welcome to Covering HOAs with One Hot Mic. So recently I had an opportunity to be on a panel with a number of city experts, landscaper experts, California Fire, Orange County Fire Authority. It was an event hosted by the Monte Water District called H2O for HOAs. This was the ninth annual. The concept here is we're going to bring some experts together in all kinds of fields, and we're going to talk about something that is affecting communities in and around, in this case, South Orange County, California. The program, the day, was emceed by a good friend of mine, Mike Perloff from Fenton Grant, Canada and Lit Law Firm. He's also the co-host of the HOA Pros podcast. Check them out. In this day, multiple people shared their experiences, information about water conservation, about legal aspects affecting communities. And obviously I was there as an insurance presenter talking about what the market looks like and how the fire hardening process of a community might be something beneficial, certainly beneficial today in the form of protecting life and property. It might be beneficial in the future with respect to either availability of carriers or rates, reductions, discounts, and such. On that panel moderated by the other co-host of HOA Pros podcast and good friend Kara Foley from Seabreeze Management Company, we were asked some very specific questions previously submitted by attendees. If there was a fire that might affect our home, can't we turn on all the sprinklers to help slow or stop the fire? That answer was provided by Andrew Almonte of the Orange County Fire Authority and Mike Safransky of Trabuco Canyon Water District. And they were adamant, no. What? That seems, to me, it actually seems logical. I've actually seen advertisements and products that are set up to do exactly this. If there is a fire, you can put it on your sprinkler system and control it with your phone in an app with your phone, and poop, it turns the water on. The concept being, no, it's not going to stop the fire, but maybe it slows it down a little bit and allows the people to get out. That's how I always thought about it. Their point was turning on the sprinklers only pulls away the water resource that the first responders are trying to use to fight that fire. Plus, the small volume of a sprinkler, a landscape sprinkler, is nothing against a really hot, fast-moving fire. But perhaps the most valuable takeaway, for me anyway, came from Mike Safransky again, but he has worked with other communities on a website called BeFireSafe, BeFireSafe.org. They're tools that will help any community anywhere that is looking to fire harden. And that could be anywhere in the country. New Mexico, Nevada, Colorado, Texas, big wildfire concerns in those areas. So community managers and board members that might be checking in on us here, go to that website, see the steps that you can take to fire harden your property, to become a FireWise community or a member of FireWise communities, to be, quote, safer from wildfires. And this doesn't go for just wildfire, but any property exposure. It's really important for us to take the position, the perspective that the insurance company wants us to be, as property owners, they want us to be as proactive with the protection of property than we can. Insurance companies are not, we can't just throw out applications as a broker, throw out applications and say, 25 carriers in the marketplace, everybody give me a bid, quote me, give me a quote. They don't necessarily respond to that anymore. That's what happens in a very soft market where things are very much in the favor of the consumer, of the property owner. And the insurance company is basically trying, the insurance carrier is basically trying just to get premium in because there's so much competition. Today, we're in what's known as a very hard market. And a friend of mine, Zach Miller, defined it as a concrete market today. It's the hardest market that we've seen pretty much in the history of the industry. And in that hard market, carriers are saying, you can send me your applications, but I want to see that you have done X, Y, and Z to protect this property. Or to put it in a different form, because you own a piece of property, there is a responsibility to manage the risk of financial loss with respect to that property. That's what risk management is. We can control risk. We can avoid risk. We can accept risk. So by controlling risk, we maintain the property, the roofs. We make sure there's no slip and fall hazards. There's no trip and fall hazards. We paint the buildings. We keep it all in good working order, in good condition. Avoiding risk. If there's a tree that's going to fall on a building, or we're worried it's going to fall on a building, get rid of the tree. We've avoided the risk. But a lot of things have to be accepted. There has to be an acceptance of risk for us owning this property. If we can't control it, if we can't avoid it, if we can't accept it, we want to transfer it. And transferring the risk of financial loss is insurance. We're paying an insurance company an amount of money, we call it premium, and the insurance company is saying, yes, we will accept that transfer. You can transfer that risk to us. In today's market, they're saying, I don't want to accept all of your risk out of hand. I want you to show me that this risk has been controlled, that risk has been avoided as much as possible. I will accept or allow you to transfer, that is, insurance company will allow you to transfer that risk. And that reduces the amount of things that we as a property owner need to accept. But insurance companies are saying, I want to see updated electrical panels. I want to see when the last time the roof was replaced. I want to know about plans to update or treat plumbing. I want to know if you are fire hardening your property before I will take on that risk. Now, the fire hardening piece isn't so much a concern right now, because we really don't have any preferred carriers that are actively playing in the space. But when we do, it's going to be important for a board of directors to have prepared their community to take advantage of those preferred carriers and the contingencies or the conditions that carrier is going to put on the transfer of risk. They're going to say, we want this to be as protected as possible. We want to have the comfort of knowing that the chances for this thing to fail have all been addressed through your control efforts and through your avoidance efforts of your risk management program. Insurance companies pretty much saying, we're not first in line with risk management anymore. You have to do these things, then we will come to the table. So it's really important for us to prepare our communities to take advantage of those, because those will be preferred carriers offering better rates. They will be preferred carriers. Speculating crystal ball, imagine it. There you go. It will be preferred carriers offering discounts that have been approved through the Department of Insurance only because you've done X, Y, and Z. So get to work on a plan. Check out that website, BeFireSafe. Get to work on a plan to prepare your community for the future. Work with your broker, your insurance broker. Work with your broker on what are the things that we need to make sure what boxes do we need to check today so that we can take advantage of the positive movement of premium, that is reduction of premium in the future. So I mentioned I like golf. On a recent trip with a bunch of friends, we had a thread going, a chat thread. And folks were commenting on the first episode of the podcast. And I was really touched by the fact that, my friends were listening to this effort, this little journey I've decided to go on. One of the guys on the trip He's from Chicago. He grew up in the Chicago suburbs. He didn't have a lot of experience with HOAs growing up. And when he came to California, he saw, he realized, oh my gosh, everything's in an HOA. He said, I don't see the value add. I said, I respect that. Especially when you're talking about single family home communities that have very little property, tangible property, like a community that has just a small open space like a park, but doesn't have a pool. It doesn't have a gym. It doesn't have a clubhouse. It's hard to visualize the value add to a community like that over one that is much larger, condominium style, thousands of owners. Others on the thread commented that HOAs are evil and that a board of directors is just power hungry. These perspectives come from experience. And I'm sad that my friends have had that experience. For me, it means the board needs to be more transparent. It means the members need to get involved. Because it's not just the board of directors doing things. They are doing things on your behalf. You voted them into that space. You said, I think you will look out for the best interests of me as a member of this community as far as the property goes. And then you checked out. You bailed. You went the way of the dodo until something happens that you don't like. And then it's the terrible board of directors. Again, there are experiences where that makes sense. But for the most part, the board of directors is operating in one space and they need to be transparent, and the membership needs to get involved. Apathy is the cancer of a community. It doesn't help anything heal if you don't participate. Being informed will go a long way. So an HOA, or more specifically, a common interest development. We have a bunch of people, they live in the space, they own the space in common, these items in common, that's a common interest development, is a not-for-profit corporation. In many cases, that corporation is generating multiple millions of dollars in revenue each year. As does any corporation, the HOA is run by a board of directors. The board is responsible for the operation of the corporation, the general care of the properties, the assets owned by the community. This includes residential condominium buildings, clubhouses, pool restrooms, fences, walls, walkways, streets, the property that you all share within your community. Assessments are collected from each member monthly, sometimes quarterly, sometimes annually, but it's your assessment that goes to pay for these operational expenses: community management, landscape care, legal fees, insurance premium. The only form of revenue that an association has is assessments. You can't have a jogathon. You can't sell magazines. You can't have a bake sale. The only way for this corporation to bring in operational revenue is through in the form of assessments to the membership. And we've been going far too long on there not being an increase to our assessments. I don't want to see an increase in my assessments because that means, I can't sell my house. That's not necessarily true. Could be a little more of a challenge, but it's not necessarily true. Well, I'm really proud that we've kept our assessments as low as we have for 25 years. Really? 25 years? That dollar isn't even worth what it was worth. Like, you haven't changed how much money you've brought in 25 years, but everything you've spent money on has gone up, and you're proud of that? You're running a corporation that can only make money through assessments. So even when a community has a minimal operational expense, there's a need to enforce rules that help maintain or improve the property. Collection of assessments, increasing assessments, making sure the financial condition of the corporation, I'm stressing that purposefully, but making sure that the financial condition of the corporation is such that it will continue to improve, that the shareholders, insert owners, members, that their asset, the ownership of their asset within that community is going to appreciate. That's what we're doing. And if we can't collect the funds, the revenue in order to operate our community, to operate our corporation, what are we going to do? Sadly, we can't just shut the doors. because a lot of corporations do that. We don't have any money left. See ya. We can't do that. So that's where you see emergency special assessments. That's where you see special assessments to collect against unexpected high expenses, lately insurance premium, or special assessments to fund reserve funds, because the reserve funds are part of what you're using to control the risk or manage the risk by controlling the exposure. You're doing that through a reserve study. It is important for everyone, even in communities where there isn't a lot of exposure, to understand that there is a purpose and a need and a value to having the community and having a board of directors. Your home is likely the largest asset you're ever going to own, and improvements in that investment are essential. The board takes its responsibilities seriously and maintains the understanding that they're making business decisions in the interest of the community as the operating arm for this corporation. Back to the thread. In the thread, a couple of questions, the golf text thread. In this thread, a couple of questions were asked. I'm going to bring them to you. I'm going to summarize them and bring them to you with the answer that I would give anybody. If I'm on a stage presenting, doing a seminar, or sitting at a friend's kitchen table, just chit-chatting after a meal. Is it the HOA or the management that we hate? Hate is a really strong word. I don't like that word. But what's interesting about this question, the way this question was framed, is it the HOA or the management that we hate? Not that we should or we should be concerned with. Who's the driving force? And the answer is, unfortunately, there's a couple of options. Because some communities are operated by a really, really strong board of directors, and the community manager is taking that information, taking their instructions and doing the job that a manager is supposed to do. And other boards have relied too much on their manager or their management company, and the management company is pretty much the one driving the bus. And that shouldn't be the case. So when you have a situation where it feels like the board of directors or the management, we're not, nothing's really getting done. It's really an uncomfortable place for everybody to be. There's a lot of discord and disagreement. You got to look to improving the lines of communication. Board of directors needs to be more confident, needs to be stronger in their decisions and their delegations to management. And management needs to be less willing to take up the mantle when the board of directors doesn't want to make a decision. Guide them, help them, bring other experts in so that the board of directors can make a smart decision. And that will help improve this hate from the membership. I'm dreading a submission to the architectural committee. They have been unreasonable and take forever to respond. Okay, well, I'm sad that you're dreading a submission to the architectural committee. You have a set of guidelines. If you get plans, whatever you're doing, and I don't even know what my friend was working on. If you had a set of guidelines and you follow those guidelines, you're not going to have a problem. The problem is when people go outside of those guidelines, or they do something before they get, they do the whole, I'm going to ask for forgiveness, not permission thing. And then the board says, you didn't get permission from us to do that. In fact, you did it wrong. We need you to take it all apart and resubmit. I think that's a little unreasonable sometimes, but I'm not the one sitting in those chairs. So I'm not in the meeting. I don't know how that sausage is made. So I'm not going to necessarily say those decisions are good or bad. What I am saying is, as the submitter, take the proper steps, ask the questions. Am I doing this right? I recently had some fencing replaced in my house and 2 gates replaced. 2 redwood gates. Simple, basic. But I called the management company, spoke to the community manager, said, what are the steps? In this case, she said, here, I'm going to email you something. There's a form you need to fill out. You need to go talk to your neighbors. And then we need the whole bid proposal or what have you. And then we'll review it at a future architectural committee meeting. And then the architectural committee will report to the board of directors. That's why it takes forever, because these decisions aren't made by the manager when you email that thing that information to the manager. I sent the manager a number of documents, the proposal, the forms that I needed to get signed, pictures of the items that I wanted to replace or repair. And she has to take that and give it to the architectural committee. Then the architectural committee reviews it at an architectural meeting, because they can't review it separate from anything. They have to review it together. And then they make a recommendation to the board. Yeah, we can approve this. Then it comes at the board meeting, which may not be the same day, probably isn't the same day as the architectural meeting, the architectural committee meeting. So the board then approves, gives it back to the manager, and a few days later, it comes back to me or comes back to the submitter as approved. Simple. Now, had I just changed the gates, fixed the fence, there's a likelihood that no one would have known or cared. But there's also a likelihood of us getting into a squabble. And I'd much rather just say, look, these are the rules that I got to follow. It is what it is. I want to get my fence fixed. Let's go. And as far as the time to respond, there are limitations on that. That is to say, there's amount of time that can pass. And if there is no response to that submission, then it's considered approved. I don't know. Honestly, I don't know what that length of time is. That's an attorney question. But I would suggest that if you haven't heard from the management company or you haven't heard from the board on your submission, that you confirm it before making the change. Because it's possible they didn't get your email. How many times do we say, oh man, I'm sorry, I didn't get your email? Well, it doesn't matter until it affects us, right? You didn't get my email. Well, I gave it to you 60 days ago, and the statute says I can do whatever I want after 60 days because you it's deemed approved. Just check. Take the little extra step to check and make sure it was received, because then you won't have any fighting. Why did our premium go up so much? Nothing has changed in our community since it was built. Yep. Nothing has changed. You've done nothing. You've changed nothing. Some cases, you haven't even had any losses, no claims. Nothing to suggest that there's something you as the community could have done to avoid your premium going up. It's just the insurance company raised our rates. Yes, they did. They did because they believe it is necessary for them to collect more premium in order to support the transfer of the risk to them on all of their accounts. Just like assessments are the form of revenue for the community, insurance premium is the form of revenue for the insurance company. But it's not that you have changed. It's that the market has changed. The carriers available in the market have said, I don't want this risk unless it looks like this. The carriers in the market have said, I can't price this risk in a way that will make me money, because it's a business, in a way that will make me money, that I can have a profit to show my shareholders, because they've bought stock. This is a publicly traded company, most likely. I need to create revenue that equals income that shows growth to my shareholders. And the Department of Insurance of my state doesn't allow us to set our rates the way we want to set them. It doesn't allow the market to decide what a reasonable rate of insurance is. The department says, This is what you can charge. So the insurance company says, okay, I'm out, AKA State Farm in California and Farmers for 18 months. I can't write. I cannot accept this risk at the premium that you're allowing me to do it. So I'm not going to write the business. I'm going to go somewhere else. And that leads to placement in sub-preferred or surplus lines markets. And that means smaller amount of carriers taking on most of the risk, therefore higher premiums. They're also non-admitted carriers, so the Department of Insurance doesn't have control of what they're going to charge. In some cases, I do feel like there is some exploitation of this condition in the market right now, but I'm not in their offices, so that's just me making crap up. Bottom line is your premium went up, but it didn't go up because you did something. It didn't go up because you changed something. It didn't go up because you had a claim. It went up because the market said, I need this to go up. Finally, why was my HOA allowed to issue a special assessment of thousands of dollars to everyone for a roof replacement? Why wasn't that money saved in the bank? You're asking the question that is answered by an increase in assessments. We're not collecting enough revenue to plan for the future. Now, in some of these cases, most recently, the collected assessments have been used in emergency formats, i.e., they've been used to pay insurance premium or some form of insurance premium, basically taking from what's supposed to be allocated for reserves and the future replacement of a component and using it today to pay insurance premium so that we don't have to do a special assessment or an assessment of any kind, or an emergency assessment of any kind, I should say. We have to figure out a way to plan for reserving money and paying for insurance premium. We can't defer those reserve amounts to the insurance or some other legal fee or the cost of some other immediate price increase impacting our community. We have to save for the future and we have to pay premium today. And that means we need to increase assessments. In this case, why was my HOA allowed to special assess us thousands of dollars? Because the HOA needs to fix the roof. It's common property. You all own it in common. Everyone shares in the maintenance and repairs costs of the common property. And if you haven't put the money aside through a reserve study and through a reserve plan, you got to get the money somewhere. So that comes down to a special assessment. Now, a special assessment is different than an emergency special assessment. There's, again, another attorney thing, but I know there's three things that allow you to do an emergency special assessment without a vote of the membership. A special assessment requires a vote of the membership. So, yes, there was a special assessment, and maybe in this situation it was deemed to be an emergency special assessment, therefore no vote. But if it was just a special assessment, it did require a vote. The membership had to approve it. And that may mean the membership said, crap, we have to come up with money to fix the roofs because I don't want it raining inside my house. All that boils down to, we've spent 20 years, 25 years trying desperately, sometimes even longer, trying desperately not to increase assessments while everything else costs more. What's encouraging about this thread, what thread? The thread from the golf thread. What thread? What golf thread? The thread from my friends. What friends? You remind me of the babe. Eventually, folks on this thread started sharing their positive experiences. I like that I feel safe in my community, that my family feels safe when I'm not there. HOAs can be frustrating, but I like the continuity they help bring to a community. We've been renting in many different communities while we search for a home to buy. It is clear which communities have an HOA and which do not. The non-HOA neighborhoods are typically less appealing. I'm actually happy with our HOA. Our fees are reasonable. I feel like I get my money's worth. In my experience, some HOA boards overreach. but a property run positively has benefits. Those are the stories that we need to hear about on Nextdoor or whatever media you want to choose. We need to champion the good experiences because they far outnumber the bad. But we hear about the bad because the bad makes press. The bad sells papers. Well, the bad used to sell paper. Now it just pops up on my Google feed because I said the bad sells papers. We only share the bad stories, the sad stories, the things that were really depressing. And we don't share the good stuff. I recently heard a story about someone who had to redesign something about their garage door in their office. And there was some statement about a board member looking through a window and finding someone for something they did inside their home. And it was a news story and it was an article in the newspaper. And it was, bad Leroy HOA. And you're just trying to hurt the people. Well, let me hear the rest of that story. We only hear one side of that story. Where's the why? Where's you had to do that through legal channels. You had to take those steps through legal channels to assess a fine or a fee. You don't just get to choose. So you have to take the proper steps. And in that case, if that unit owner, if that board did not take those proper steps, and the owner, all they have to do is hire an attorney and it's done because the board didn't take the proper steps. So we need to tell the stories. We need to know what happened, but we also need to tell the story of the good thing, the good resolutions, the good experiences that people have, because that is going to help everyone enjoy living in a community. And they're not becoming less prominent. Communities are going to be everywhere all the time. We're not building new projects that are not in community associations. We're building community associations. And in some cases, we're even incorporating neighborhoods that weren't even community association for these exact reasons, because in my experience, some boards overreach, but a property that is positively run has its benefits. So before we close out, please like, subscribe, draw in the air with a sparkler, comment on today's episode. We need more exchanges, more positive engagements where people can share their opinion without being told they're wrong. Surround yourself with these kind of people. Learn who you truly are and disconnect from people who aren't or don't let you be the you are proud of. Or in my words, my philosophy, that's my new philosophy. My philosophy is practice BAPPY, BAPPY. Be active, positive, and proud of yourself. We'll see you next time on Covering HOAs with One Hot Mic.